Crypto Hotep here with another investing video. We're on week 63 of the family portfolio and dividends tracker. If this is your first time watching this video, feel free, go to the channel, go to week number 1. If you want to see my whole methodology, the reason why I'm doing this, and the whole thought process behind what I'm doing. So basically, in a nutshell, I gave my family a short list of stocks that I chose from, mostly dividend stocks, some growth stocks as well, of companies that are well known, that they know. And I asked them to pick their stocks. We then proceeded to use M1 Finance as our broker of choice, and you'll see why shortly here. And then every week we go through this portfolio. We go through balances, we go through dividend activity, we go through market swings, just feelings, emotions, just documenting the whole investment journey with my family here. Also to showcase that you can build generational wealth over time if you're patient, and that anybody can do this. And hopefully these videos are, hopefully they provide some sort of context and are helpful for you. But most importantly, I hope they're helpful for my family as well. Feel free to hit the like, subscribe button, helps me out a lot, and support the channel. Now, before we go to week 63, we do go back to week 62. And week 62, we were on the verge of hitting $2,400 in the account. Again, if this is your first time viewing this video, go to week number 1 and check out the balance in week number 1 versus now. So week 62, we were at $23.95 and 11 cents. We had a money weighted rate of return of 0.89% positive. Dividends earned looks like about $10.78. With a total gain of $17.96. So this week we actually went down over 2% now at 23.4125. Market gain of a negative, as I mentioned, negative 2.40%. Dividends increased though, so now at $12.15 with a negative market gain of negative $48.90. What happened? Well, it seemed like it all happened within a couple days, and that was the Elon Musk and Trump feud that has just blew up. So the markets did not like this by any means at all. This feud actually, even though it only has lasted like a day or two, erased Musk's wealth by about $34 billion. It's a huge number here. It also did not do well for Tesla, with Tesla plunging over 14% in a single day. Again, guys, as we spoke about, the markets don't like uncertainty. They don't like things that are out of the norm. They don't like surprises. This was a fairly big surprise, and what happened was Elon Musk had some critical words for the quote-unquote big beautiful bill that Trump is trying to pass through Congress. And that bill is supposed to promote no tax on tips and other tax benefits of the sort, but at the same time, it's supposed to increase the spending that the government will be doing. Well, if you are unfamiliar, Elon Musk was a part of the Doge organization that was looking to decrease government spending. And he did leave the Doge, ironically, quote unquote, he left the Doge organization, I want to say it was May 30th. It was like the end of May. He left the Doge organization, and around that same week, that big beautiful bill came out as well. So very odd and coincidental chain of events there. So the long and the short is, the markets did not like this feud that is going on currently, still going on, with Trump and Elon Musk going back and forth. So that's why we have a huge swing in our number. It just takes a couple hours, guys. And like I said, you have to have a strong stomach for this. So let's go to the activity here. So the activity between this week and last week, we had a lot of dividend activity. So we had a payment from Walmart. We had dividend payment from Starbucks, Kroger, Target, Church & Dwight, Aflac, Visa, and the Smucker Company, along with TJ Maxx. So a big overhaul of dividend activity. What do we buy with that dividends? We bought some Amazon. Bought some Amazon here. Okay. So we also had a deposit, our regular deposit of $15 here. We did have several buys, and we bought some Costco, we bought some Pepsi, we bought some Google, McDonald's, and Target. Mostly all of these companies are in the low, except for Costco right now. Pepsi is in the low, Google's in the low, McDonald's is down, and Target is way down currently. So we've been buying the dips here. Okay. Now let's look at our portfolio. We go bottom to top as always. At the bottom is my wife, but she is one of the only few that have a positive in the green year-to-date return. So my wife's year-to-date return is a positive 4.44%, dividends earned of 0.46 cents, market gain of $7.39. Current balance is $244.17. Celsius, the main driver here, 59.22% money weighted rate of return year to date. Simply amazing. And I looked at the charts on Celsius, I look at them every week or so. I think Celsius has the play to get to $80 again. So just fantastic move here. Everything else is down though, as I mentioned. Kind of down in the dumps here. So Pepsi down over 13%, but we bought some Pepsi. Google down over 8.5%. We bought some Google though. And then Tesla, as I just mentioned, we were at the green last week. If you go back to last week at 62, week 62, we were at the green. And now, because of this feud here, just pushed Tesla's price down. And now year to date down over 19, almost 20% again with Tesla. Okay, but it's all good. It is all good. Let's go to our middle stock. Our middle stock, money weighted rate of return of a negative 5.26%. Dividends earned of $1.44 with a negative $11.42 gain with a balance of $260.65. So a couple players that we've seen before, Tesla down over 23%. We've talked on that. Amazon, Target still down over 28% here. Costco up over 10.5%. Starbucks down, still down over 5%. Sony and Google still in the green here, looking really, really good here. Let's go to our youngest stock, kind of closing the gap here. They're still down, but down 0.9%, so less than a percentage point. Dividends earned 0.87 cents here. Negative $2.23 total gain. Still over $300. Balance at 301.72. Very similarly, Sony's pushing upwards here, up over 26% in Sony, up over 14% in Costco. Apple still kind of chugging along. They're still at this like $200 range here, that they're not necessarily going up, they're not necessarily going down, they're kind of trading in a range here. And usually when price and stocks, when they start trading in ranges like that, an explosive move is to come. You just don't know when, but an explosive move will come. Tesla down over 23.59%, and the Starbucks still down 4.12%. Okay, let's go to our oldest. Our oldest down over negative 8.91%. Dividends earned of $2.90. Total gain of negative $64.53 with a balance of $748.47. So, again, the prime players, Apple down almost 19%. Tesla, again, Tesla's going to weigh that portfolio down over 26% in Tesla, but Costco and McDonald's kind of fronting the load here, trying to do what they can, up over 7% on both of these respectively. Okay. What are we thinking? Are we thinking of doing anything with these portfolios? Absolutely not. It's just volatility in the market. It's just uncertainty with what's going on. So it is what it is. And last but not least, my stocks here. So I'm actually up in the green, up 3.19%. Dividends earned of $6.48. My total gain is a positive $21.43. My money, not my money weighted rate of return, but my balance is $786.24. So what's been going good with mine? So surprisingly, technology is in the green. So we're at a positive 1.49% for technology here. So despite Apple being my top holding in technology, down over 19.5%, Nvidia has popped up over 10%. Microsoft has been great at over 15%. Amazon still in the red on Amazon, but I think we're closing in on that gap. We're only down 0.89%. Google down over 6%, but Broadcom up over 19%, and then AMD and Meta just doing great work. Coinbase still looking good in my book with Coinbase. Crypto has been down for this week, so needless to say, Coinbase will follow suit. Industrials and energy. Industrials and energy up over 7.5% in this sector, and it looks great. This is one of my best sectors. Caterpillar, Waste Management, Duke Energy, Deere and Company, and then Cintas. As I mentioned, Cintas is a sleeper. A lot of people don't look at Cintas, but Chevron down almost 4.5%. ExxonMobil down over 5%. And then Union Pacific down almost 2% here, but not too worried about that. Restaurants and food. I was very surprised by restaurants and food. Restaurants and food, Coca-Cola the GOAT, something that never goes down here, up over 14%. Texas Roadhouse up over 16.5%. Hershey closing the gap here, almost positive with Hershey, McDonald's, Domino's, and Smuckers all in the green here. And then Starbucks, we are slowly but surely closing that gap here with Starbucks. I think I'll buy some, if we get some extra money in here, I'll look to buy some Starbucks. I will also look to buy some more Domino's pizza here as well. And let's go to our pharmaceutical. Pharmaceutical is really easy. It's just 50-50 split between Pfizer and Johnson & Johnson. And it's pretty much even, pretty deadlock even here with both of those guys. Okay. Yeah, and so what I would say, guys, is as we kind of wrap this up here, uh, this is one of those times in the market where it just pays to be patient. Um, Nobody could have timed what's going on between Trump and Musk. Nobody could predict the future. You can't. And that's again why I say that if you want generational wealth, you do have to buy assets. And those assets have to appreciate, and they also have to generate some income for you. So am I telling you to put all your money in dividend stocks? No. Mix it up with some growth stocks as well, some stocks that don't have dividends but are prone for growth, right? But if you think that you're going to generate generational wealth by saving your money in a bank, you're sadly mistaken. Um, again, we're only on week 63, and this balance has gone from, I want to say, $300 to $400 since last February to now over $2,300. Now, for some people, this may not be a lot of money. True, but you have to remember we've done this in less than 2 years, and we haven't been putting a lot of money in there consistently. We've been putting money in there consistently, but it hasn't been these large sums of money that you hear on Twitter and YouTube about what people are doing. It's been very modest, very small amounts just to see what we can get done. And it's been going pretty well. It's been going pretty well. So I will say, stick to the course. Stocks are very volatile. You have to have the stomach for it. And that's why you have to do your research on these companies and trust in the vision of that company, especially if they're a long-standing company. These little volatility blips, they don't really mean anything. They're opportunities to buy at a lower price and to add to your bag and to add to your stack. But with that being said, guys, we're going to end it at week 63, balance of 23.41.25, market gain or total gain of a negative 48.90, money weighted rate of return of a negative 2.40%, with dividends earned of $12.15. If these videos are helpful, feel free to like, subscribe, comment. And as always, guys, thank you and happy investing.